one thing that we all didn't want was for the finance minister to change the taxes. And that is exactly what she did. Although the markets were initially disappointed, they managed to get over it and ended the day on a flat note. So the finance minister spoke for a few hours, but you don't need to know everything she said. She made some announcements about taxation that both were good and bad for your wallet at the same time. Now, if you try to read what happened, it will all seem like Greek and Latin to you. To simplify the complicated stuff and help you understand what they really mean for you, I spoke with Vishvajit Sonagara, the founder and CEO of the tax filing platform Quico, and Dinesh Pai, head and chief strategist of Rainmatter Investments. Listen in. So the much-awaited union budget after the general elections is out now. The finance minister gave the budget speech in the morning, after which the markets went down, but they're again, I think, up to the levels that they were in the morning. But if we have to really look at what this budget really means for the general public, right? The promises that were made before the general elections, have they really been fulfilled or not? So to start with, one thing that everyone is concerned with is personal taxation. So let's go ahead with that. Vishvajit, there has been change in the tax slab structure under the new regime. There has been an increase in the standard deduction also from 50 to 75,000. And the number that's been doing rounds on internet is that the income taxpayers will be able to save 17,500 rupees in their tax liability because of this change in the new tax regime. Could you really explain to us what this slab rate change, the structure change in the new tax regime really means for the taxpayers, and where does that 17,500 number really come from?
All right, Bhavya, thanks first of all for having me here. And I think we need to step back a couple of steps. I think one of the things that Finance Minister mentioned was that they are planning to move away from two regimes, onto having a single regime. And now if you look at the budget announcements, especially around personal taxes from those lenses, everything makes sense, right? So Income Tax Department recently announced certain statistics, and they said more than 80% people have already opted into new regime, right? Which is the default regime now, by the way. So all these soaps that were announced around personal taxation were around new regime, right? There are no changes in the old tax regime. Obviously so. I think you can read between the line that old regime will eventually be done away with, right? So now coming to what are the changes in new regime. So there are several changes, you already covered them. The slab rates have changed. The standard deduction, which was earlier used to be 50,000 rupees, is now 75,000 rupees. Now, remember, last year, up until last year, standard deduction wasn't even available under new tax regime. And Finance Minister introduced that amendment. She increased it from 0 to 50,000, and now again she is increasing it from 50,000 to 75,000. Now the 17,500 rupees is essentially the reduction in tax liability due to slab changes, and number two, increase in standard deduction, right? If you do the math, then if your income is up to 15 lakh, then your effective tax liability will reduce by 17,500 rupees.
Right. So that's one part of it. That's when we talk about personal taxation. But when we also look at capital gains, a lot has come there and a lot of surprises, a lot of maybe expected things, right? So there has been changes in short-term capital gain tax, long-term capital gain tax. Could you take us through those changes as well? And what does it really mean for the retail investors?
Right. So a lot of it was unexpected. So I think the market swing that you are discussing is probably market just digesting all the announcements that came out in the budget. I think one very important change that came out is for listed securities, the long-term capital gains has been increased from 10% to 12.5%. Right? So which is why maybe momentarily market reacted a little negatively to it. Now there are few extensions to that announcement. The earlier exemption of 1 lakh has also been increased to 1.25 lakhs. Mm-hmm. The other change that was introduced is short-term capital gains now will be taxed at 20% instead of 15%. So there is some increase there as well, right? So in general, if you are an investor, by the way, if you sold anything before 23rd July, then you will be grandfathered in based on the old tax rates. If you sell anything here onwards, 23rd or after that, then it will be taxed at new slab rates, new tax rates. Now, of course, this introduces more complexity when you are doing your taxes. Now you will have to bifurcate your transactions before 23rd July, after 23rd July. So that introduces certain kind of certain hardship at the end of taxpayers. Now, at the other end, if we talk about unlisted securities, right? So that covers real estate capital gains.
Vishwajit, before we move on to the unlisted securities, here's a question. So after the budget speech was over, I was speaking to a few of my friends who have no idea about what taxation is, right? So they were talking about, when we were talking about the LTCG, it increased from 10 to 12.5. But the exemption limit has also increased from 1 lakh to 1.25. So does that really mean that it has balanced off in some sort of way, is what people had doubts with. So if you could answer this doubt for most of the laymen who do not understand what taxation really is.
I think if income tax department wanted to create a distraction, they have succeeded at it. So that 0.25%, that 2.5% increase in tax is on your entire capital gains, right? So let's say if your capital gains are, let's say 5 lakh rupees. Right? So earlier you used to get 1 lakh exemption. Now you'll get 1.25 lakh exemption. Now that leaves you with 3.75 lakh. Earlier the tax rate used to be 10%, which is 37,500 rupees. Now it's 12.5%. So you can do the math. So I'm sure that, of course, if your capital gains are up to a certain limit, you still will not see any changes. Maybe you can see the benefits. But if your capital gains exceed certain limits, then you will start seeing your tax liability increase.
Right. Okay. Moving on to the unlisted ones.
So in case of unlisted, I think the major change is that earlier there were certain type of assets where if you hold them for more than 24 months, for example, real estate or, certain unlisted securities like, for example, founders like me who own shares in private companies or, certain debt instruments. Those were, in case of long-term were taxed at 20%. Now that has been reduced to 12.5%. So that is number one change. The short-term pretty much remains same. It used to be slab rate. It is still slab rate. So there is no change there. However, one important change that was introduced is they abolished the 36-month rule. So now there is only 24-month rule, right? So in case of certain kind of capital assets, if you hold them for more than 36 months, then only they used to be considered long-term. Now everything unlisted, everything that is not traded on exchanges, if you hold them for more than 24 months, they'll be considered long-term. If you hold them for less than 24 months, they'll be considered short-term. So very quickly summarizing, primarily two changes. Long-term capital gains instead of 20% are now 12.5%. And the holding period requirement has been changed from 36 months to 24 months in certain cases.
So you mean long-term capital gain from 10 to 12.5?
10 to 12.5. So long-term capital gains on unlisted securities used to be 20%. The listed securities used to be 10%. Right? So it reduced from 20% to 12.5%, which is why we were rejoicing with Dinesh that now, angel investors, VCs, also founders like us who are, building enterprises, would have to pay instead of 20%, we would have to pay 12.5% long term.
Correct. So also when we talk about the short-term capital gain tax, Finance Minister in her speech said that for certain asset classes, it's going to be 20% and for others, according to the tax slab rates. So what are these certain assets?
So I think you can divide capital assets into three categories: securities, real estate, and other capital assets. So securities is anything that you are trading on exchanges, right, where you are paying STT. So anything that you are trading on exchanges, paying STT is essentially long-term capital gains under Section 112, and it will be taxed at 12.5% now. It was earlier used to be 10%. Now real estate capital gains, right, which are also capital assets. So if you sold real estate, earlier long-term used to be 20%, now it will be 12.5%. And short-term will still remain slab rate. There are other capital assets also, for example, foreign securities. If you are investing into foreign shares, mutual funds, ETFs. Also, if you are investing into unlisted securities, like I said, then those are considered other capital gains. In that case, the long-term capital gains has been reduced from 20% to 12.5%, and the short-term remains slab rate.
Got it. Also, a lot of people have this doubt that is indexation really completely gone?
You can presume so. Because earlier indexation was only available with the 20% long-term rate. First of all, it was only available on long-term gains. It was available on the 20% tax rate. Now, since the 20% tax rate itself goes away, you can presume that indexation benefit also goes away.
So it goes away for real estate, it goes away for equity as well.
Absolutely. It goes away for anything that was earlier taxed at 20% with indexation.
All right. So moving on from here to discussing some of the corporate taxes, as you mentioned, we were discussing about the unlisted holdings as well. So Dinesh, if you could take that up, that the government has completely abolished angel tax for all assets across all taxpayers. What does that really mean for the startup ecosystem?
Right. No, thanks, Bhavya, first of all, for having me. So, angel tax obviously has been a hugely debated topic in the startup ecosystem, right? So, especially in the Indian context, because there is no parallel to angel tax anywhere across any other tax regimes. So, it was introduced in 2012, Section 56 to 7B, specifically was for avoiding circulation of unaccounted funds through startups where shares were issued at premium to the face value, etc. And obviously, for the past year or year and a half, there's been lots of talk around removing angel tax itself, right? So I'll explain what it is. Basically, it says that if a startup is raising equity or equity capital, which is at a valuation higher than the face value itself or higher than essentially the issue or the fair market value of the startups itself, that additional delta of that issue price versus the fair market value is taxed at around 31% as an income for the startups itself. So this wasn't a tax that was paid by investors, it was a tax paid by the companies themselves. But why was it affecting the investors? It was because they realized that if you're doing an investment in a company and if you're putting in say 100 rupees, if 30 rupees of that goes away in taxes, rather than the company having access to that 30 rupees for growth and whatever, right? And it was an issue, obviously, I think. And last year in Finance Bill 2023, the government actually brought in even foreign investors under this ambit. So obviously there was a lot of noise around this, especially in the past 3 to 4 years. There's obviously been a downturn in terms of the number of deals happening, the amount of funding available, investors I think coming into the country. So there's obviously a welcome move because all the confusion, all the deliberations around how to value a company, how does the IT department actually value a company based on the assets or based on other methods that are available, all that confusion goes away. So it's absolutely great for the ecosystem itself. The investors are obviously lauding it on social media, etc. also. So it's a great move, obviously, given the fact that in India especially, most of the startups, I think, who are funded by VCs are past that particular stage of risk taking where you kind of proven that there's a market for it. But the early stage of risk is still taken by HNIs, family offices, and angel investors. And for all of them, angel tax was a huge issue. So essentially this solves for it. So we'll see more startups being funded by people, HNIs, family offices in that initial risk phase of it, where then VCs can come in and kind of underwrite more of that growth stage of risk. So it's absolutely good for the ecosystem itself with the angel tax removal.
I would like to add one more thing to what Dinesh said, right? So that coupled with now long-term capital gains reduced from 20% to 12.5%, that brings unlisted securities at par with listed securities, which I think is a very strong underlying statement.
Correct. And to add to that, I think everybody's talking about indexation also, right? In unlisted, but if you look at it, I think net, I think bringing down the capital gains, the long-term capital gains for unlisted to 12.5%, at least from the primary read of it, at least from whatever workings I was able to do, it seems if it's a vintage fund from 2016, 2017, you'd still be able to pay lesser tax as compared to the older regime of 20% plus indexation, which was available for unlisted. So it seems like a great move, and it was asked for all investors for a long time now. At least the long-term capital gains was an ask that was pending for quite some time. So the government has kind of now looked at this issue. Obviously, they've supported startups in various ways. The fund of funds, various seed funds. They've obviously now announced a lot more of those incentives for space sector, for example, with 1,000 crore fund that is specifically set up. So obviously they're doing a lot, and I think these two steps, along with all the other things, will just have that exponential benefit over the next few years.
Right. Like even at Startup Mahakumbh earlier this year, everyone was talking about various initiatives being given to the startup ecosystem for it to boom because how much it really contributes to the development of the economy, right? And even a lot of startups are redomiciling and the government wants them to redomicile their registered offices back to India. So this is maybe one of the biggest moves in which government is allowing to give that space for the startups again, if I'm right.
Right. I think, with this angel tax, I think there was, one was the primary issue, right? The secondary issue was also, anti-dilution, liquidation preferences and all of that. So there were a lot of these, overlaps between IT as well as FEMA for international investors who are coming into the country. So the angel tax kind of takes away all of that. And, I think more companies will be happy to be registered in India because at least there is at least more certainty in terms of tax regulations, in terms of what's going to happen once the equity funding comes in, right? And obviously more investors want to look at India given the growth prospects. The government has been focusing, I think you just mentioned Startup Mahakumbh. Obviously there was an announcement where the government is going to now, at least keep certain slab of even tendering as well as contracts and certain amount of budgets around where they're procuring stuff from to also startups, which is a great move, I think, because there'll be more startups who will be essentially supplying to the government, which is a good way to kind of recognize these startups also. So I think everything put together, I think the government has done a lot more with these two steps. I think the benefits will only accrue over the next few years.
Right. Also, the corporate tax rate on foreign companies has been reduced to 25%. What does that really mean for the corporate India, which is operating in right now, Vishwajit?
So it has been reduced from 40% to 35%. No, I think it's around PLI schemes and all the multinational corporations now setting up shops in India. I think it's a welcome move. It will bolster India's claim on whatever you want to call China plus one, right? Kind of upper markets, more to these multinational corporations coming and setting up, their establishments in India. And I think it's a favorable next move for anybody who is looking to build, manufacture, or make in India.
Right. So there has been also a lot of discussion about OECD taxation when it comes to MNCs, the foreign corporates operating out of a lot of companies, which sets a minimum tax rate in a lot of territories they're operating in. Do you think this is somewhere in alignment with that?
No, absolutely. I think as we get intertwined more with global economy, kind of bringing our tax regime in line with international tax rules. I think is always helpful for global trade. India is increasingly getting woven into international trade, and I think as we sign more and more trade agreements with different, we did it with Australia I think last year. We are looking to do it with Britain now with the new government. Right? As we sign some of those trade agreements, having tax regime at par with international tax regimes would be really helpful to even the playing field.
Right. Got it. Another announcement which is relevant for the common man is around NPS, in which they have launched a new scheme which they have named NPS Vatsalya, in which you can actually invest for your children as well till the time they turn 18. So how is that really helping?
In my opinion, NPS is kind of one of the one of the most underappreciated schemes. Right, it's equivalent of 401k in Americas. If you look at 401ks in Americas, I think 80% of American wealth is kind of stored away in 401k. That's where the financial might of American capitalism comes from. Now, in India, historically, we have relied on defined benefits, pensions, and things like that. This is the first scheme actually that kind of focus on defined contribution. It's also market linked, right? So your investments are managed by all the bona fide financial institutions that we otherwise invest with, and your money is invested into equity markets. Of course, there's asset allocation and things like that. So I think anything towards NPS, in my opinion, is a very bold statement. I think what I would like to see is NPS also being offered as an alternative to EPF, right? So EPF is a fixed income scheme. Very small part of it gets allocated to equity, while NPS has, in certain cases, up to 80% can be allocated to equity. Right? So I think if we really want to become, kind of a market-driven capitalism, then in that case, people investing their retirement savings towards equity and those kind of things, especially youngsters like us, who have long time horizon, more risk tolerance. So I think NPS is the right scheme to invest in. Any changes in NPS. There was another change also in the NPS that I forgot to mention, is that under new regime, earlier for central and state government employees, the deduction used to be 14% of your basic plus DA. While for private companies, it used to be 10%. Now that has also been brought to parity. So now both for private and government employees, the NPS reduction under new regime is up to 14% of your basic plus DA, right? So that's another announcement in the same direction. But like I said, what I would love to see is government offer it as an alternative to employers, where employer and employees can together decide whether they want to go into a fixed income scheme like EPF or they want to go into NPS, which is more market driven.
Right. I think if you talk to the PFRDA chairman, that's something that he always talks about, that how they're always speaking with the corporates and trying to bring this as an alternative option to EPF as well. But maybe like in a few more months or years, we'll see that coming as well. And also when we talk about mutual funds, 2% TDS is being withdrawn on mutual funds. Again, if you could explain what that really means.
I think I haven't gone through that yet, Bhavya, so I won't be able to put a statement on it. But I think there used to be certain TCS reductions in case of certain remittances and things like that. I'm not aware if there is a mutual fund withdrawal, then there will be a 2% TDS. I'll have to look into it.
Okay. Also, STDs on FNOs proposed to be increased from 0.2% to 0.01% respectively. Again, if both of you can throw some light on that and what does that really mean, Dinesh, if we can start with you.
I'll let Dinesh take this.
I think, obviously this has been coming, right? I think everybody has been talking about it. The RBI governor has spoken about it. The finance minister has spoken about it. SEBI has been speaking about it. There is at least a little bit of a concern in terms of retail participation in FNO, right? And if it is speculation, is it capital formation, is it adding some value in terms of value accretion to the economy itself? Obviously, I think the increase in STT is a part of that concern. They've obviously kind of at least looked at that and revised that upwards about 80 to 85%. Again, the impact of it in terms of how that will play out, I think we'll only see going forward. But I think it's more emerging from that concern around retail participation, which has obviously ballooned over the past few years, right, since the pandemic. So obviously, I think they feel that STT can be a deterrent to people who are looking at options as just a speculative income. We'll only see how this will play out in the next couple of years. Yeah.
Right. Vishvajit, any thoughts on that?
No, of course. I mean, I think Dinesh hit it home. There was a lot of discussion around, right? I think whether futures and options is really for retail investors or not. More often than not, Nitin has quoted it as weapon of mass wealth destruction, right? So I think this will help cool off the markets, increase in STT. I think I also got a clarification on the 2% TDS on mutual fund withdrawal. So essentially, if the AMC repurchases the MF units, in that case, there used to be 2% TDS on the repurchase of those MF units. That has been in fact withdrawn, so that 2% TDS has been withdrawn.
All right. So when we talk about, while we were talking about the repurchase of mutual funds, when we talk about the buyback of shares, there's been certain announcements upon that as well, that it will be taxed in the hands of the recipient investor and not in the hands of the company. Again, how does that really impact the company and the investors?
Right. So I think if you remember a couple of years ago, a dividend, also there used to be dividend distribution tax that, companies used to pay. And that was abolished and the dividend was made taxable in the hands of recipient. I think this move is along the same lines. Buyback capital gains were earlier exempt in the hands of recipient. Now they'll be taxable. However, there's not a lot of clarity around whether they'll be taxed as capital gains or they'll be taxed similar to dividend income. So that's something to be seen. In my honest opinion, I think if they are taxable, they are anyhow sale of capital assets and hence they qualify as capital gains, but we'll have to see that. Now, what impact does this create? I think earlier there used to be, it used to be a great kind of tool as a corporate action for a lot of large corporations, right, to instead of giving out dividends to reacquire stocks. Now, I think you will see less participation from retail investors because there is a taxability on it. I think that I could presume to be the direct impact.
Okay. Any thoughts on the same, Dinesh?
No, I think I think what I haven't gone through that provision in itself, so maybe I'll take some time to go through it. Yeah.
All right. Lastly, also when we talk about customs duties on gold and silver, even they have been reduced to 6% and for platinum 6.4%. So when we're looking at all the investment instruments for a retail investor, whether it's in gold and silver, whether it's in equities, real estate debt, how do you think going forward, given all the changes that have come up in the taxation, how do these instruments look like for a retail investor investing in?
I think anytime taxes go up on any kind of profits that investors make, kind of essentially puts the dent in the mood, right?
Yeah.
So I'm sure people are looking at it with mixed feelings. In my opinion, I think two important takeaways. One, I think the rationalization of long-term capital gains, reducing it to 12.5% in case of unlisted securities, I think will be a huge boost to startup ecosystem in India. Right? I think we were talking about angel tax, but for example, Dinesh, foreign investors could still kind of go back to their domicile tax jurisdiction and can still reclaim those taxes paid in India as a tax relief in their jurisdiction. However, for Indian investors, there was no outlet, right? So this is, in my opinion, a huge huge shot in the arm, you could say, to the domestic investor ecosystem, especially like you said, HNIs, family offices, and things like that. So that, in my opinion, is a really positive statement. I think we have seen all the numbers, not just around how much funds startup raised, but how much employment startup have generated, the delta that startups are adding to now Indian GDP. I think incentivizing startup ecosystem, investors, all stakeholders in the ecosystem, in my opinion, is a very, very, very positive statement. I think the other important, from personal taxation point of view, I think the other important statement, in my opinion, from a finance minister is kind of continuous reinforcement that old regime is going away. New regime is the new normal, if you want to take it as. And they want everyone essentially to enroll under new regime so that old regime can be done away with.
So they really touched upon different points for the general public, that the promises that they actually made in their pre-general election agendas have been touched upon in some way or the other for the general public in this union budget. So if I have to ask you, was it an Aam Aadmi budget or was it not?
Dinesh, you want to take it up?
Yeah. I think, if you consider the startup ecosystem to be a large part of Indian, say, workforce today, it's a genuine profession, right? I think most people are looking at being startup founders, innovating at whatever scale, right? Being MSMEs and or individual entrepreneurs having small teams. There was lots in the budget for MSMEs themselves. I think the government has said it's either SIDBI or NABARD. I think they'll be setting up branches.
SIDBI to open 24 new branches.
Correct. So I think there'll be some of these direct funding routes available. There'll be credit guarantee schemes. And, who are the ultimate beneficiaries of stuff like this are common Indians, right? I mean, everybody who's working in these companies, in these MSMEs. So while I think, direct taxation of personal income taxes is one way to look at it, but I think also looking at it from an employment opportunity, upskilling opportunity, a lot has been kind of done in this budget. So I would say, obviously the government has to be balanced in how they kind of allocate resources. So with whatever is at their disposal, I think they've done their utmost best to kind of allocate a lot to areas which have been spoken about, MSME, startups. I think Vishvajit was talking about it. I think the employment creation in itself through startups and the vibrant IPO market in India. SEBI is speaking openly about how there are about 1.2 lakh crores of IPOs waiting to happen. That is the Indian rupee amount. And I think, all of that is only adding more and more benefit to Indians and the Indian economy. So I would say, this whole tagline of is it an Aam Aadmi budget? I think it's too old now. I think we moved on. I think we should be probably asking if it's going to be helping that next layer and wave of Indian workforce coming into the economy, right? Because I think they need to be upskilled, they need to be better, they need to compete with the other economies around us who are doing much better. I think in that sense, I think the government has done utmost possible.
Right. Vishvajit? Yeah.
No, absolutely. I think I would build on that cliche instead. That I remember some of the stats, income tax department stats from last year, that only less than, I think it was 10 lakh people who file income tax returns with income more than 50 lakh. Right? So if you look at India, I think in my opinion, more than 80-90% people file their income tax return with taxable income less than 15 lakh. And like we discussed, if the effective tax liability reduces by 17.5 thousand rupees at max, right, that definitely is a common man's budget, right? Everybody is going to benefit through it because of the change in slab rates, because of the increase in standard deduction. And let me tell you, like, the lion's share of direct tax revenues come from salaried individuals in India, right? So any changes to reduction in taxes on salary always helps common man. So and in that regards, you could look at as a really positive sign for the common man.
So also there have been a few data points as to how personal tax collections have gone up, but corporate tax collections have been going down. So do you think, one, why? And two, do you think there is a way to increase corporate tax collections or like reduce the burden on personal tax collections? How can those converge?
I think, in my honest opinion, it's rather than corporate tax collections going down, it's the direct tax collection from individuals going up. What has happened is because of the kind of organization, the formal organization of our economy, the connectivity of Aadhaar and PAN, and hence all the financial transactions are now within the ambit of income tax department. What has happened is the TDS deduction rules now almost all income sources attract one or the other kind of TDS deduction. What that has resulted into higher tax compliance rates. I hate that those numbers are still not getting reflected in number of income tax returns getting filed. But I think definitely the TDS collection has almost doubled in last 4 years since COVID. Right? Also, self-assessment tax and advanced tax collections have doubled in last 4 or 5 years, right? So I think the direct tax compliance for individuals and the tax collections there have been slowly and steadily growing up, rather than the corporate tax collections reducing.
Right. So is there anything else apart from what we've discussed that we've missed as to what was discussed in the union budget speech today? Anything that you guys think we missed on discussing, which is important for the common man or for the retail investors?
I think, in my opinion, we covered all the bases. It was a quick discussion, and you greatly conducted it. So I think we covered all the bases.
Okay, great. Thank you so much for being on Markets by Zerodha on such a short notice, and for having the breakdown of the taxation analysis with us. And again, thank you so much.
Thanks, Bhavya. Cheers.
Well. A lot was said in those 80 minutes of the budget speech today. Change in tax slab rates under the new tax regime, increase in the standard deduction under the new tax regime, abolishment of angel tax, changes in short-term and long-term capital gains, reduction of customs duty on gold, silver and platinum, changes in rules for NPS contribution. But I hope you were able to understand the budget enough to sound like a tax expert in front of your friends and bosses.